pitting two biggest investment companies in the world, BlackRock and Vanguard, against each other. It's Clash of the Titans. Who's gonna win and which one's best for you? Hey there folks, Money Jim here, your money pal. In the investment world, they don't come bigger than Vanguard and BlackRock. See, Vanguard's got over $10 trillion of AUM. That's assets under management, or in plain English, how much of other people's money it looks after. While for BlackRock, it's even more, with about $12 trillion, making it the biggest investment company on the planet. If they were economies, they'd be the third and fourth largest in the world, and each more than twice the size of fifth place. Let me clear something up real quick, because that's an awful lot of conspiracy theories out there saying BlackRock and Vanguard are out to take over the world. They ain't. It's not their money they're investing in all these stock market companies. It's their clients, including everyday investors like you and me. Yeah, BlackRock and Vanguard get to vote in company meetings, but it's on behalf of their clients, not some shady plan to control everything and everyone. There's figures out there that say BlackRock and Vanguard, along with State Street, own 88% of the S&P 500. That's just doggone wrong. Just look at how much of their funds are invested in the top 10 stocks. It's about 9% for BlackRock and 7.5% for Vanguard. So now we got that all cleared up, let's look at how else they compare. So though BlackRock's bigger, that don't necessarily mean better. So we're gonna look at that product range, their fees, performance of some of their funds, and how they're owned. So first off, who got the most investment options? Well, BlackRock's like the Walmart supercenter of investing. They got almost everything. Hundreds and hundreds of ETFs and mutual funds in the US, and well over 1,000 more worldwide. You want them actively run by managers? They got it. Index trackers, got plenty of those too. Stocks, bonds, commodities, real estate. If you're into ESG or environmental, social, and governance investing, BlackRock's got that covered as well, with over 100 sustainable investment options. How does Vanguard compare? They sure got a lot of choice, but nowhere near as much as BlackRock. See, Vanguard got less than half as many mutual funds and only a fifth as many ETFs. A big part of that's because Vanguard likes its meat and potatoes, no-nonsense investments. It's US and international growth, value, and dividend stocks, government and corporate bonds, short, medium, and long term. Of course, BlackRock got all that too, but if you want to invest in small Chinese companies, or stocks in Peru, or an ethical high-yield bond fund, BlackRock's the one. And another thing BlackRock offers that Vanguard don't are cryptocurrency ETFs. Vanguard only invests in things that generate cash flow, so no Bitcoin ETFs and no gold ETFs neither. So if you want something exotic or spicy, Vanguard ain't for you, it's BlackRock. But if you're happy with plain vanilla investments, and there sure ain't nothing wrong with that, Vanguard's got all you need. So what about costs? See, costs are real important when it comes to investing. They're one of the only guarantees. Guarantee you'll pay them, that is. And all else equal, a lower cost investment will grow your money more than a higher cost one. So cheaper is better. Now, while of course fees vary depending on the fund or ETF, in general, both BlackRock and Vanguard are low cost. A lot of that's down to their index funds and ETFs, many of which got razor-thin fees. And that's a big part of why these two got so big in the first place. Vanguard got some of the lowest cost investments you'll find anywhere. It charges 0.03% for its S&P 500, total stock market, and international ETFs, as well as most of its main bond ETFs. 0.03%. Boy, that sure is low. And it ain't just a few that are super low cost. About 60% of all Vanguard funds and ETFs cost less than 0.1%. So how does BlackRock compare? Well, it also charges 0.03% for its S&P 500 and total stock market ETFs, but only a couple of his bond ones. And not even 15% of his ETFs cost less than 0.1%. In fairness to BlackRock, investing in the more exotic stuff nearly always costs more. So it's no surprise that, in general, BlackRock's fees are higher than Vanguard's. Anyhow, still gotta hand it to Vanguard. Their fees are super low, so they came out best when it comes to costs. So moving on to performance. But before we do, if you like what you heard so far, go hit those like and subscribe buttons, because I got plenty more content like this for you. Now performance is a trickier one to compare, because they both got so many investments and they don't all offer the same ones. There are a few where you can do an apples for apples comparison. Now take it from me, ain't no point in comparing the index tracked funds and ETFs. They both do a mighty fine job at copying the indexes. You can't hardly tell the difference between them. Where you can spot some differences were the multi-asset funds. That's ones where they invest in both stocks and bonds, and maybe some other types of investments too, all in the same fund. First off, you're going to look at their static allocation funds. That's where the amount of different types of investments stays the same. Both BlackRock and Vanguard got ones with 80% stocks, 20% bonds, 60-40, 40-60. Looking back as far as we can, that's the end of 2006. You can see that for 80-20 funds, which Vanguard calls growth, BlackRock comes out tops with an extra 48% gain over those 19 or so years. This is a similar story for the 60-40 funds, which Vanguard calls moderate growth. Again, BlackRock claims to win with an extra 30% gain. And it's full house, because again, BlackRock's top dog for the 40-60 funds, which Vanguard calls conservative growth, delivering an extra 48% gain. So clear winner there. Now let's look at their target date funds. That's ones designed to ease up on risk as you approach retirement by reducing the amount in stocks and increasing the amount in bonds the closer you get to the target date. Comparing BlackRock's LifePath 2035 fund with Vanguard's Target Retirement 2035 to a target date 10 years from now, you can see it's Vanguard on top this time with a 22% bigger gain. Their 2045 funds, that's if you retire in 20 years from now, ain't much in it. But again, it's Vanguard, it gets its nose ahead by 10%. And for those of you retiring in 30 years in 2055, you can see it's been neck and neck for most of it. But this time, BlackRock just sneaks ahead with an extra 9% gain. So what can we learn from all this? In all honesty, not much. Sometimes BlackRock was ahead, other times Vanguard was. And as the old saying goes, past performance ain't a guide to future returns. If you're looking at performance, go check out the specific fund rather than how an investment manager's done overall. So last up, we're going to look at how BlackRock and Vanguard are owned. This is more important than you realize. See, BlackRock's a public company. That means you can invest in its shares, which trade on the stock market. Vanguard, on the other hand, is a privately owned company, so there ain't no shares you can buy. So why is the difference so important? Well, it means BlackRock got two bosses to keep happy. Its clients, that's folks investing in BlackRock funds and ETFs, and its shareholders who want to see BlackRock's stock price and dividends go up. That's why you see BlackRock jumping on flavor of the week investments, whether that's sustainability, AI, or cryptocurrency. There's shareholder pressure on BlackRock to keep selling more and more funds, so they keep coming up with new products they think investors want, rather than ones they think are good long-term investments. Because Vanguard's private though, there ain't no shareholder pressure. And in fact, they got a real neat setup. That means Vanguard's owners are its investors. That's why Vanguard's so committed to lowering costs and sticking to what investments it thinks are the best in the long run without jumping on no bandwagons. So going all the way back to what I said at the start, if you really are worried that BlackRock or Vanguard are out to take over the world, just invest in BlackRock stock or a Vanguard fund. Then you'll own them. If you like this video, check out the others in my Financial Face-Off series, where we pit two more titans of the finance world against each other.